Okay. Hi, everyone. Thanks for joining me. We are building North America's next lithium hydroxide and lithium carbonate plant. Well, our project is located in Quebec, Canada, and we are a vertically integrated producer, meaning we will be going from the mine all the way through to the electrochemical plant. So both the mine and the plant will be located in Quebec. We'll be targeting to produce about 33,000 tons of lithium hydroxide or lithium carbonate equivalent. By being vertically integrated, we are a low-cost producer. So this means that we are projecting to be the lowest cost producer of lithium hydroxide in the world, and that would be relative to brines as well as other hard rock projects. We're also a very low-cost producer of lithium carbonate. We are projecting to start construction the end of this current quarter, so in June. We're in the project financing phase right now, and I'll give you a quick update on where we are on project financing later in the presentation. But that would mean that we'll be in construction out of the mine, I would say, by the end of June next year. So we've got a 12-month construction and commissioning time. That allows us to produce a concentrate. We'll be producing a 6.25% concentrate from the mine. That is a sellable product, and so by the end of next year, we should be in the market with concentrate to sell for the interim between when the chemical plant is ready to actually start receiving our concentrate. So the chemical plant is got a 24-month build and commissioning time, which means we'll have about 12 months where we can sell concentrate. Our cost on the concentrate is about $220 US a ton. That material currently sells in the market for between $800 and $1,000 US. We do have offtakes for our battery chemicals. Our offtakes are with FMC, Johnson Matthey, Northvolt, and then as well SoftBank recently, through their investment in the company, gained the ability to have a right of first offer on up to 20% of our production. So this is just quickly where we're located. So the mine is located here in Nemaska. We'll mine 1.1 million tons of ore, concentrate it down into 213,000 tons of concentrate at 6.25%. That concentrate gets shipped from Nemaska down to Shawinigan, where it is processed into battery chemicals. Our focus is hydroxide, but we do have the capacity to produce carbonate as well. This is to give you a quick update on where we are in terms of construction at the mine site. So we have 37 million tons or 33 years of production. We're expecting to recover about 85% of the lithium. We'll be recycling up to 90% of our water, so environmental footprint has always been something that we've been conscious of in our mine development. We've also taken a bulk sample. So we did a bulk sample this winter, and we produced 1,100 tons of 6.25% concentrate. So we're very comfortable up at the mine site in terms of being able to deliver a high-quality concentrate material. This is to give you a sense of what's been constructed so far. In the blue building right here, this is the concentrator building. So the shell of the concentrator building has been constructed, and it is ready to receive equipment. This is the electrical line right here. That was hooked up just last month, so the mine is fully electrified now. So we've run 13 kilometers of electrical line. The access roads on the mine site are already built, and the administrative offices are up, which is why we can be in production with the concentrate in 12 months. This is a mine site, again, just to give you a sense of the size. That's a concentrator building. Administrative offices are here, and then the bulk sample started here. This is Shawinigan. So this is where the electrochemical plant will be installed. In the blue is the phase 1 plant, and in the green is the commercial facility. Out of the phase 1 plant, we've produced about 50 tons of material, of lithium hydroxide, all battery grade at this point, and we've used multiple sources for that as a raw material for that, including our own concentrate as well as lithium sulfate from our offtake partner, Johnson Matthey. So as I said, this has already been producing. This is scheduled to go into commissioning 24 months from our project financing, which should conclude this month. So we would start construction in June. So we've shipped 50 tons of hydroxide to our customer, Johnson Matthey. They're very pleased with the product. They verbally told us that it's one of the best hydroxide materials they've ever received. So all of our production so far has been battery grade. As I said, we have a 24-month construction and commissioning period, and all of the long lead items have been identified. So as soon as the project financing closes, we will be placing purchase orders for those long lead items and installing the equipment. This is just to give you an idea of the spec. So we did publish our specification on our lithium hydroxide material. It's a bit of an eye chart here, but if you come by the booth, it's in our PowerPoint presentation. I'm happy to go over it with you. But it just basically traces all the metals that the battery guys care about when they're looking for battery-grade hydroxide or carbonate. So this is our spec on the hydroxide. We are well within industry standard. On cost basis, we are projecting to be the lowest cost producer of lithium hydroxide, and that comes from the fact that we own our own source of raw material. So we own our own concentrate. Right now, the Chinese are buying concentrate from the Australians at up to $1,000 a ton, which gives them, and it takes 7.5 tons of concentrate to produce 1 ton of finished product. So the Chinese are starting with a cost base in excess of $7,000. Which is where you see them here on the cost curve. We do have a cost advantage on hydroxide because our process allows us to go directly to hydroxide. And so we're not producing a carbonate like many of our competitors are and then transforming the carbonate into a hydroxide. We go direct to hydroxide. So that gives us a cost advantage. As well, we're in Quebec, so we have low cost electricity. Our electricity right now runs at about 4.5 cents a kilowatt hour Canadian. So a big processing cost is the electrical cost. This is where we are on the carbonate scale. So again, we're not the lowest cost producer in carbonate, but we are still very, very competitive. And again, carbonate is not our focus, hydroxide is our focus, but we do have the capacity to adjust our line to produce a certain amount of carbonate. Just quickly go over where we are in the project financing. So we are raising $800 million US for the project construction. So that's construction and commissioning of both the mine and the chemical plant. So far, we've signed $150 million in a streaming agreement with Orion Mine Finance. This was their first financing in lithium, and so we've forged some new ground there with Orion. We launched a bond offering of $350 million US. The bond offering closed mid-May, and we expect it to all settle at the end of May. So that's $350 and $150. Then we were able to attract SoftBank, and SoftBank came in. They did 9.9% of an equity investment in Nemaska Lithium, and with that equity investment, they also opted to take up to, or opted for a 20% right of first offer on our lithium hydroxide and lithium carbonate material. So SoftBank, as many of you know, is a very large organization. They own a little bit of everything, but one of their main investments, or one of their investments, is in an India company called Ola, and it's sort of an India Uber. And they have a vision with Ola of electrifying that fleet. So electric vehicles are not just happening in China and North America, they're already starting to happen in India as well. So, and then in addition to that, SoftBank also has a major investment in solar installation in Saudi Arabia. And so some of the things that we don't often talk about because we all get sort of fixated on the vehicles, but energy storage is a very important market as well for lithium-ion batteries. So then the balance of the balance, so SoftBank did 9.9% of the company, which is around 90 million, 100 million Canadian. The balance will be raised in equity. I suspect that that will launch this month and hopefully close by the end of the month. And our project financing will sort of be all complete by the end of June. So construction would start immediately after that. We are covered by 8 analysts. Most of them are Canadian banks, although Clarkson is European and Roth is out of the US. We're here for the next 2 days and happy to meet with you. We're in Zone C. Thank you very much.